Hey, what's good, YouTube? It's your boy Will coming back with another update video for today, Thursday, September 9th. And as you guys see from the indices map, we had a little bit of a wishy-washy day. Looking at the charts, we had some low points, but then we had some strong points as we ended the day. Had a lot of breaking news come out, but overall, I think it was a pretty positive day. I do got some confirmation of some good info on the charts that I want to show you guys, and something else I want to teach you guys about. And then I'm going to give you guys my prediction for tomorrow, leading into next week, because again, the chart does look super bullish. But I wanted to first start with the indices because again, it's important for you guys to get an understanding of how the market goes. Is normally how some of the stocks you guys follow or buy will also go, right? You can't have a stock on its own just do well and then the entire other market is red, right? That doesn't work. Depending on what section of the market it's in or what sector it's in or what indice is in, and how that indice does will affect how those stocks you buy or are looking at or follow will do as well, right? But let's start off with the lesson for the day. So today I wanted to talk about triangle patterns, right? So we have something called a descending triangle pattern, an ascending triangle pattern. We've mentioned triangles before. We didn't really get into like how they function, what the point of them is, or how the formation starts, right? So in a descending triangle, as you guys see from this pattern here on the left side, essentially what it does is when a stock enters this pattern, right, it finds a level of support that it keeps bouncing off of, as you see here in multiple touch points, right? What changes is the high that it keeps setting. The highs keep getting lower on each touch as it builds on that point of resistance, which in this case is a slanted resistance, right? What normally happens in a descending triangle pattern when you can identify them, essentially is you get a break down to the bottom side or to the low side, right? In which you end up losing money, for example, if you're holding a position, or if, for example, you bought in here thinking this was the dip so you could enjoy the ride up. When you get in a descending triangle formation, essentially what will end up happening is you will end up losing money once you get past this point where you bought in here, right? So you always have to be aware of these, even if you don't necessarily think these are important to you. It is important in a way because it'll protect your initial investment. Because again, in the stock market, like we always say, number one rule, you buy low, you sell high. The opposite of this, the opposite of a descending triangle, is something called an ascending triangle, right? You're going to be pretty excited here in a minute too. So essentially, this is when you keep bouncing off a point of resistance in multiple touch points, all right? And every time you get rejected to the downside, right? You get rejected every time that it touches that point of resistance. Eventually, it does have a breakout to the top side though, which is pretty good because I'll explain why in a minute, depending on which chart you're looking at, is how big that breakout will be. The point of this triangle, though, is that it has a line of support that forms on the bottom that keeps setting higher lows, right? Which is what you want. You want the highs or the lows to keep getting higher and higher on each touch point because it confirms to you that there is an ascending triangle pattern, right? Again, if you entered this position and let's say you entered down here, right? This is where you started buying the dip after a rundown, right? Essentially, you would want to watch for this because this has the potential to make your upside even 10 times higher, 100 times higher. Again, depending on what hour pattern essentially on the chart you're looking at. If you're looking at the 1-day chart, it has a certain meaning. If you're looking at a 4-hour chart, it has another meaning, a 2-hour chart, etc., right? The more touches you have on this point of resistance, the better the breakout will be. If you can identify it clearly on like a 1-year, 1-day chart, that's probably one of the strongest ascending triangles you can find in a chart, which means that this breakout will be dramatic when it does. Like it's going to be a violent breakout when it does break out. But as you see, an ascending triangle is characterized by a bottom trend line, which is this line here, a trend line that you identify, that is formed as the price continues to set higher lows, which we circled right here. The more touch points on the trend line, the more reliable it will be. An ascending triangle also contains a flat horizontal resistance, which is the top line here that we already drew, that is formed as the price continues to reject in a previous high for a given period, once the more touch points on the resistance line, the more reliable the pattern will be, right? And they don't have to be exact triangles. It can simply just be a slanted line and a parallel line, right? Or it doesn't have to form an exact tip of a triangle, right? It just has to have this formation where you're bouncing off a continuous point of resistance and you have a supporting trend line in a diagonal form, whether it's going down or whether it's going up, right? But if you guys have been paying attention to the charts today specifically, I'm going to show you guys a picture I have of the chart. Let me get rid of my drawing so it doesn't look so sloppy. So this is the 2-hour chart for AMC, and as you guys see, what do we see? That strong point of resistance that I had already labeled here for us, right? Previously, when I told you guys that this was a strong zone of resistance, every single time we touch, we have a break to the bottom side. We touch, break to the bottom side, touch, break to the bottom side. Today, we finally touched, and we have not broke to the bottom side yet. However, for tomorrow's prediction, I'll get to it in a minute, I'll give you what I think will happen. So this is the 2-hour chart, right? So let's get rid of this picture now. Let's load a new picture in. So that was a 2. This is the 4-hour chart. Again, as you guys see, no matter what hour pattern you're looking at, you can still clearly see that this is a triangle. Excuse my sloppy line, but this is an ascending triangle. You have a trend line that is a support line in an upward position. You have higher low, higher low, higher low. You have a touch of resistance with a break to the bottom, touch of resistance with a break to the bottom, touch of resistance with a break to the bottom. So everything that we are looking for in an ascending triangle. I got another picture for you guys because again, I want to prove to you or show you guys exactly what you guys need to be looking for in charts, right? So this is the 1-year, 1-day chart. Now, this is even more clear, right? Because we have this straight green bar that goes straight up. This very nice line of support trend line of support that we see ascending with multiple touch points with higher lows, right? Higher lows, higher lows. We have our point of resistance up here. With every single time we touch, we break to the bottom side, touch, break to the bottom side, and then touch. And then obviously this one doesn't have the break to the bottom side, but you see that the candles are now forming. Literally, the next candle has to form within this box. If there's one here, it has to form within this box, right? But the point is, as you go into smaller and smaller time intervals, right? So you go to a 1-minute chart, you get hundreds of candles on the chart. You go to a 30-minute, you get less. You go to a 1 hour, you have 8 candles in a chart per day. You go to a 2 hour, it's 4. You go to 4, you get 2 candles, right? And you go to a 1 day, and you literally have a candle per day. The clearer the picture is in this type of chart specifically, the stronger this triangle and the more violent this breakout will be to the upside when it breaks out, which will either be tomorrow or Monday. I have a feeling it will be tomorrow just because of where the pattern is and how tight it's getting down here. There's no more pressure for it to go, right? So when this does break out, it will break out to the top side. It will finally push through this heavy point of resistance. And as I told you guys before, once we break through this point of resistance here, it's going to run. Because after that, there's literally nothing stopping it. There is no other heavy point of resistance. If we go into the 1-year, 1-day chart, we zoom in. This was the last heavy point of resistance we have in this chart heading up. We have another resistance point at 53.20. We have another one at 60.35. And we have the last one at 68.99 before we would break out to the top side, meaning going back into our all-time highs of 72.62 and above. There's nothing after that, right? There are 3 points of resistance. Yes, because this is a formed ascending triangle on a 1-day chart, this breakout will be violent. It will have a good magnitude or a good push. I mean, there's no predicting exactly what the amount will be. What I want to confirm is that it does break out past this point of resistance, and once it does, we have the ability to either consolidate in the 50s, we have the ability to consolidate in the 60s and travel sideways for a couple of days before we shoot up again. If you get something called Fomo, which I can show you an exact picture of what Fomo is. Fomo is something called fear of missing out. For those of you that do not know, it is a thing in the stock market. I'll go here. FOMO. Anxiety that an excitement or interesting event may currently be happening elsewhere, often accused post of social media, right? So FOMO in the stock market is called fear of missing out. Fear of missing out in a chart is nothing more than essentially this. When a stock starts to break out and you feel that you're going to miss out. So because you feel that you're going to miss out, you start to buy in, and multitude of people start to buy in at different points, which only makes the stock run up that much higher, right? So what happened to Clove, for example, on this date here back in the beginning of June, this is FOMO, right? So as the stock started to break out this day, you see this candle that shot up from essentially 9, broke it out to 11, and then all of a sudden, boom, you go from 11 to 1270, and then from 1270 and after hours, you shoot up to 1687. From 1687, boom, it shoots up to 2490. 2490 the next day, all of a sudden, you're now at 2818. This is FOMO. Something that goes parabolic straight up into the sky will have the same effect coming down, right? But it is a thing. Potentially, when we do break out of this triangle, we could get these spikes, and then all of a sudden, all the day traders, all the scalpers, all the people that are sitting on the sidelines not wanting to hold AMC for long periods of time, you'll start to see that they'll dump their money in to push the price up higher, right? Because again, they don't want to FOMO. They're FOMOing. They don't want to miss out on the run up, right? Because again, an ascending triangle, especially on a one-day chart, for anyone who's been in the stock market, anybody knows that's going to be a massive breakout when it does break out. So you can expect to see that breakout either tomorrow or Monday, because again, just based on the triangle and where we are in the chart, it doesn't have that much room left to build anymore. Literally, we're like at the end of that triangle. Like there's no more. It's one day left and then you blink. So it's either Friday or Monday's breakout as you see this triangle forming. But again, we'll wait to see what the chart chooses to do. Outside of that, again, showing you guys my tools that I use, going back to unusual whales that I quoted yesterday. I did see some interesting things in today's option chain as purchases that were coming through. Again, I do have preset premium of 25,000 or more, so anyone spending 25,000 or more. I did finally add the delta to the chart so you guys can see. But essentially, if you guys are looking at this, we have some calls today. Essentially, this person spent $214,000 for $50 calls expiring on 9/17, where they're going to be earning $47 for every $1 AMC goes up. Finding even more interesting, directly below that, you see that a person spent $37,000 for 10 contracts on a put. Now, a put, if you remember correctly, is when you predict the stock will go down. But look what he's predicting it will go down from. For 9/10, which is September 10th, tomorrow, a put at $85. And this person applied $37,000, which means if this expires tomorrow and AMC is not below that number, then it expires worthless at that point. So we need to be above 85 and trending down for him to make money in this case, right? So pay attention to these type of things. $111,000, $284,000. If you go down this list, and this list goes on forever, it's 250 items per page, and there's multiple pages. If you want to know some totals, call premium, as you see right here, 141 million. Put premium, 41 million. Just today, that was spent into AMC. You can actually go in, if you want to buy unusual whales, I would recommend it. It is a really good tool for you guys to use when you want to analyze option chains and what the sentiment is behind the stock. There is nothing that even comes close to this. Literally, the amount of data that this gives you is astronomical. So as you see here, for this strike date, 9/17, which is next week Friday, there is $350 million worth of calls already purchased. For the put side, we have essentially $250 million. So we're about $100 million more on the call side than the put side. Popular strikes or breakdown by strike, the $50 strike seems to have the most amount of money on it, as you see here on the chart, 300 million sitting at the $50. So that AMC will be at $50 or higher, is the I guess the biggest prediction, right? There's just a lot of really good information. If you guys want to learn about it, feel free to leave a comment or DM me on either Twitter or IG. I'll be happy to teach you guys how to use this if you want to sign up for it. I recommend any tool that will give you an edge in the stock market. Again, you have to keep your psyche in a positive mindset, and you got to use anything that'll get you there. For me, it's the tools that I have at my disposal, right? And I have a lot of them because, again, I like to have as much information as possible at all times because that's how I get conviction in the plays that I choose to play. I'm going to start giving you guys tips on other plays as well. So for today, I'll give you guys some homework if you want to look into it. I bought or opened a position officially in a company named Hippo. I'll show you the chart. As you see, it's a newer company, started in early January, had an initial public offering, and started around the 15, so it was like around $11-15. As you see, it had a spike in early January, beginning of the year. If you guys remember, there was also a correction right around February, and you see this massive sell-off. There was a secondary sell-off in May, and you see this last run down to 378 before it found a floor. Another little terminology for you guys to learn, something called a falling knife. This would be a constitute of a falling knife. A falling knife is when a stock starts to sell off and you don't know where the floor is because you're not reading the chart. You're just throwing your money in. Oh, I think it found a floor here, and you throw your money in here, and then it continues to still run down. That in the stock market is called a falling knife, just for those that are curious. But I did open a position in this stock. It did get an alert in unusual whales, which I can show you guys actually. HIPO. So what alerted me was these massive calls for 27,000, 26,000, 50, 50, 50. There was just a massive amount of money going into this stock, and this is just for this week. I can actually adjust for last week too. Going through the 9th and apply. Because I bought into this position last week Friday, and as you guys see, there is a significant amount of money. I actually think it was this one here. Yeah, this 194,000 that when I officially bought into the stock. But I did open a position in Hippo. From now on in my videos, I'll start giving you guys tips of companies that I'm opening positions in. So if you guys are interested, you are welcome to look into them as well. But I'll leave it at that for today's video. Again, if you have comments or questions, leave them down below. Please don't forget to like and subscribe. I appreciate each and every one of you that watches my videos all the way through the end. It does help with the YouTube algorithm. And I'll catch you guys in the next one. Peace.